welcome to Protea Academy. I'm Zane Stevens, the founder of Protea Financial. Today we're talking balance sheet, and I want to focus in on balance sheet 101. Now, this might sound a little bit boring, might just sound like some sort of dry accounting speech, but it's more important than that. Understanding your balance sheet is critical to understanding the financial health of your business. Whether you're a winery owner, small business operator, or just trying to make sense of your books, this short video will give you the foundations you need to be more successful. So let's start. A balance sheet is a snapshot of your business's financial position at any single point in time. Think about it as a financial photo. When you look at a report, it will say balance sheet at and a very specific date. And when you're looking at that balance sheet, you'll realize there are three core components. Assets, which is what your business owns. Liabilities, what your business owes. Equity, the difference between the two, which reflects the value of the ownership in your business. These three components make up a key equation in the accounting process, called the accounting equation. The simple equation is assets equal liabilities plus equity. This equation, the accounting equation, always has to balance, hence the name balance sheets. So let's go into a little bit further. When you're looking at the balance sheet, you'll see the assets, liabilities, and equity section, but there'll be even more detailed breakdown depending on the type of assets, type of liabilities, and different arrangements of equity. In the assets, you'll find your current assets, which will include cash, inventory, accounts receivable. Anything that you think you can turn into cash within a short period of time, usually less than 1 year. You'll also have your non-current assets, which includes equity, land, buildings, and long-term investments. Anything that you would take a little bit more time to convert into cash or would need a specific process to be able to liquidate. Similar to the assets, the liability section is broken down between current liabilities and long-term liabilities. Current liabilities are short-term obligations that your business needs to pay within the next year. These include accounts payable, your trade payable, credit card balances, and any short-term loans. Under the long-term section, you will view debt that needs to be paid off in longer periods of time, like business loans, mortgages, and potential deferred payments due longer than 1 year. Equity, also known what's left over with the owner after the liabilities are paid, includes money you invested, retained earnings, so profits or losses from prior years, as well as the current year profits. In short, equity is your claim on the business after everyone else gets paid and all assets are liquidated. So why does it matter? The balance sheet's important, and understanding it is important because it helps you assess liquidity of business. How well can you meet your short-term obligations? Do you have enough short-term assets to pay off your short-term liabilities? It also shows you leverage. How much of your business is financed through debt? How much of your assets is made up by your long-term debt balances? And how much of it is made up by equity financing? Showing leverage is a good sense of how much money your business could obtain from a bank to be able to help you if you're wanting to grow or find ways to accelerate revenue. Understanding your leverage gives you a sense of how much you could potentially obtain through bank financing to be able to give you a cash flow influx to invest in future projects or growth of your business. A balance sheet also reveals trends, like whether you're building value or digging yourself a deeper hole. Balance sheet is also important because if you're speaking to investors to raise capital or talk to a bank to get debt, one of the first things they want to see is the balance sheet, because it is that picture of your business and gives them a good sense of the health of your business. Profit and loss is really important because it shows you your revenue and your expenses and if you're making any profits. But all the real story of your business is sitting in the balance sheet. It gives you a sense of what assets you have, what liabilities are due, and what the value of that business could possibly be. The balance sheet isn't just for your accountant, it's a vital tool for business owners who want to make better decisions. At Protea Financial, we help you not only produce accurate balance sheets, but also understand what they mean. If you're ready to take control of your business's financial future, reach out. We're here to help. Thank you for watching and stay tuned for more quick tips on financial fundamentals.